So Jay's going to stay up here. I want to bring Jeff and Jerome back up, and I want CryptoEri to come up as well. CryptoEri is going to run the panel. I think this will be outstanding. You know, there's a lot to get into when we talk about the payment space. So.
Yeah, it's really great because you're witnessing the transfer of value over the blockchain. All three of these guys are doing it, bringing value to merchants, individual peer-to-peer, and all of the people who want to use blockchain as a real use case utility. I think for a lot of the XRP holders, this is maybe the first introduction to a use case was payments. And now you're seeing three individual use cases that do it in their own personal way. So I have just two questions for these guys. We'll go fast. In the fact that blockchain is a killer app for this kind of transfer of value, I'd like to hear from each one of them. How are stablecoins going to affect their business? Because I think we're going to see the onslaught of stablecoins in a big way in 2024. So I'll start with Jeff. How are you going to handle this, this wave of stablecoins?
Like for the DApps like us, especially for decentralized finance services, the stablecoin is pretty critical for our business because it's kind of a carrier for a value, and also it's kind of a most basic bridge between a fiat and a cryptocurrency. So everybody will feel most comfortable on their stablecoin. So they will think that that's the safe assets. So like the existence of a stable coin among the pair is pretty critical because usually when you do a DeFi at like a AMM DEX, usually the stable coin pair is the most popular pair. So most users want it. That means that's the thing that users needs the most. So in that manner, I think stablecoin is really critical for DeFi's, especially for decentralized DeFi, because like other payment stuff can use the like a US dollar or like a real euro that is issued by bank. But for a DeFi in a decentralized contract, we cannot put those custodial currencies up there. So cryptocurrency is a good vessel to carry that assets, and also it's a great bridge for users to from fiat to a DeFi.
Yeah, that's a really great answer. Thanks, Jerome. How's the stablecoin going to change your world with the high use of that?
Banks have a monopoly on fiat, and in the past, you needed a bank involved if you want to do anything with MasterCard, because they would hold the fiat and they would say yes or no as to whether or not you could do that. With a stable coin, we now don't need banks involved. We can settle with MasterCard using stable coins. We're able to deal with ASIC in Australia, get a regulatory license to operate, and essentially it means we can now provide our service without fiat, without a bank, and we can truly enable innovation using these open APIs and protocols and stuff. So yeah, that means it's bankless for us. So that's pretty material.
Yeah, sounds like your universe expands with the use of it. Jay, stablecoins.
Yeah, so first of all, I want to know from the audience rather than, so everybody knows, stablecoin is pegged to the underlying dollar, which has to be maintained. But can anyone from the audience tell me what is actually a stablecoin? Anyone? Good one, but not the right one. So basically, a stablecoin is a IOU of a IOU, right? So government in today world, what is fiat? Fiat is a IOU that that is backed by the government. What is stablecoin? That is a IOU of a IOU that is held by some third party company to with the same promise that one day you will be able to redeem it. but it's a game changer in a payment industry. Why? Because as a new industry blockchain company, you have the access to the same market as the banker have, right? You don't have to go to the traditional route, rather than you make your own route to clear that payment, to make the settlement. In that way, it's very effective, right? It's just the only caveat I see in the stablecoin is that how does they maintain the value pegged to the underlying dollar? That's the only thing that I get scared of. Other than else, it has the ability to change the way people do finance. Everything you see, everything you do with your app, financial apps, stablecoins has the ability to change everything. Rather than you go the traditional way, you just send. If I have to send my friend or anybody else from Canada to US some money, if I go to the bank and do a transaction, which I do every month, because we have people working from the US, I have to use the Swift, right? So go to the bank, submit your transaction, wait for 5 days, whether it get clear or not. If it not, then provide more documentation on top of that. Versus on the other hand, time is money, and money is times. It's a directly proportional thing, indirectly proportional thing. So when I send you a USDC, it's the same currency to currency transaction. You get it within a second. And then you go to your liquidity provider. You said, I'll sell this USDC for this much of AUD. Now deposit it back to my bank. So the friction is only solved partially, not fully, because the last leg is always fiat, because bank rules the fiat. And everybody wants, end of the day, doesn't matter how much your preference is, you want to have that money in your bank account, right? And there is no technology in the world that can, in the banking sector, that can hold your stable coin. Not maybe as of right now, there's no technology. Maybe going forward, they may offer you a stable coin account as well. But it has already changed the way the finance work. And we are witnessing at Spendabit's platform, because we have some institution clients which are really, really interested to do, moving the dollars across border using the stable coins.
Thanks.
Like one thing to add, I think like another like good stuff about stablecoin is that there can be many creativities that can be like using the stablecoin. So for example, like DAI from the MakerDAO are recently introduced as DAI, which is the deposit DAI, and that works like if they deposit DAI to their contract, then they buy the US Treasury bill out of it, which gives you like stable 5% yield for just this. So it's kind of like a yield-bearing stable coin. And I think that can be, if that's introduced on XRP ecosystem, it's going to be a game changer, because there are no native yields on XRPL. And yeah, as Jay mentioned, I think the backing issue is one of the critical issue that are concerning about the stable coins. So like if these are fully backed, and you mean like USDT or USDC, they all issue USDT or USDC based on their US Treasury bill, and they earn like trillions of dollars on based on those like the minting they do. But still, we do not know like how much they have on like liquid, how much they can like immediately liquidate, or like do they even have that money? So that's the issue that we have. So yeah, I think it's kind of like a different point of view, but maker style kind of stable coins, that's really like, it really excites me on how they managed to like issue those stable coin other than a dollar backed way. So I think the creativity is one part of the stable coin that is really interesting.
Yeah, it is interesting. We're going to see a lot of versions of the stablecoin, I imagine. And so it's going to change and add to our expansion.
Somebody has a question in the audience.
Yeah.
Go for it. No. So what? See, that's the thing most people doesn't understand about XRP is just not XRP. It's a bridgeable asset. That means you can bridge it to AUD, you can bridge it to EUR, you can go to EUR to GBP. He showed the same thing, the liquidity pool, the shortest path. The same concept can be applied to the payment system as well. Not only that, when you move anything on the XRP rather than the XRP is a IOU obligation movement, right? But but what you can do is similarly what Ripple does is you can make that transaction not only a IOU transaction but a value transaction by binding the XRP, real XRP with your transaction. Yeah,
Yeah, good answer. It was a perfect answer. Bridge.
go for it, John. Not in the immediate future.
As a Korean, I really hate that question. Like, I really feel like interesting about algorithmic stablecoin because I mean like issuance of dollar itself, it's really centralized to America, and what algorithmic stablecoin is trying to do is trying to ruin that by like creating an like unnoted like issuance of a dollar. But I think I agree with Jay that it's not going to happen in the recent year because everybody has interest in it, but they dare not do it.
I disagree. Hang on, I get a turn now. I think there is potential for an algorithmic, but it's not in the same use case that we've seen in the past. I think the next global reserve will be algorithmic. It will be some sort of basket of currencies that's weighted based on different currencies, fiat currencies, but it will be an algorithmic global digital reserve.
You know, in the payment industry, the money movement is only valid until you have the deep liquidity, and that's what makes stablecoin as a stablecoin. Are we there yet? No. But are we going to be there? Yes. In the future, once the government decided to launch the CBDC, because that's the same version of the stable coin on the CBD side of the house, which will provide the deep liquidity. I think that's where we have the better chance to launch a algorithmic, algo your stable coin so that the system can take care of it. But it has to have a deep liquidity. I'm talking about plus $100 million of tied up in the Nostro account so that you can fulfill that the currency conversion functionalities features. Yeah, go for it. I agree with you. Not only just one asset, I think it should be a pool of basket of assets. So that it makes to, not only the currency should be gold or all those things should be tied up so that the, yeah, yeah, yeah. Yeah. You know, the funny thing I remember is, I used to think that, every dollar government has a liability for us to, give back that dollar, but that wasn't true. The issuing bank, whoever issued that dollar to you is only responsible for that promissory note, not the government. So that's the hard reality that I learned. Oh, what? I thought, Bank of America or Bank of Canada is responsible for my dollars. If the bank goes down, they will be able to, the FDIC or CDIC insurance will be able to backfill. No, it's the bank duty, or you can say, fiduciary duty to fulfill that obligation. That if you have some money issuing by them and they took your physical money, they are the one responsible, not the government. Go for it. Yeah, I don't have the capability. Otherwise, I would have shown you the flare as well. So not only we are live on the XRPL, we are live on the XRPL sidechain and also on the Flare testnet. I'm only talking about on the testnet environments Flare. So we did a POC last year with the Flare, everything, FTSO, all that stuff. The only thing that we missed was the leveraging thing, that you have to put some collateral to it, because that's just not simple as it looks like. Envy Hugo for building that thing, because it's a very hard thing to build up, especially in the volatile environment of cryptocurrency, to have the thing stabilized according to the value proposition. So I think FTSO can play a bigger role once the network becomes more decentralized. For example, node of Australia is connected to node of New Zealand. Node of New Zealand is talking to nodes of England. It's all about the network influence and the network communication, how much liquidity it has, how much communication, open communication it's doing to, to have that route clear for you to have the transaction pass through. So I think this will come in the near future once the Flare gets more adoption. Obviously, it's a superior tech to the XRP ledger. No offense to the XRP ledger, because it doesn't have the smart contract, but it's coming as a part of the hooks. But hooks are not complete smart contract. It's not Turing complete. What that means is I can launch a IOU on a XRPL. It's still gonna be an IOU rather than on a Turing complete platform where I can bridge some other third party asset natively on the chain. And that's what I love about Flare, Turing complete functionality.
I don't have anything else to add.
Yeah. One last question then for you guys, and we're going to call it a day. I want to thank everybody for coming today. That was just wonderful. And each one of these guys have gotten on a plane to get here. So I really appreciate also that you've come and participated. I very much appreciate it. Here's my last question of the day. If you could remove one friction point, what is that friction point? And how would you solve it? So you've got a magic wand, and everybody deals with some sort of friction. Jeff, tell us what your friction point is. You've got a magic wand. How is that going to be solved?
Yeah, I almost said SEC, but I should not. So, yeah, for like a Web3 builder point of view, I think the friction point that I feel the most is how to like adopt this technology to the mass, because it's really hard to explain. Like, if it's not that seamless enough, then there's no needs for those like regular users to use a D app, right? They do not have to create wallet, or they do not have to like concern about their seed phrase, losing their seed phrase, or getting scammed. Like all those worries just disappear in CEX, right? That's why like even though after the events like FTX, everybody is still using CEX. So I think we have to get over like builders have to persuade those users on using those like decentralized apps, and like making those process more seamless so that they can not even feel some like hindrance on using those. Because I think CeFi still has many problems, and there are many opportunities for those like CeFi holders to like further like embrace their assets. So I think those friction points between like the mass and the DeFi or like DApps, I think those like bridges has to be closing together so that mass can be adopted to the DeFi or DApps.
Thank you. Jerome.
Yeah, look, starting a business is pretty hard, and starting a tech one is exceptionally hard. And then dealing with crypto is just, you need a counselor. The mental health sort of strain and pressure is phenomenal. And I don't know if anyone else in here has got a crypto company that's trying to get licensed by various regulators around the world right now, but it's fucking torturous. We're dealing with like the Australian Securities Commission, Central Bank of Ireland, FCA in the UK. We're trying to deal with banks in the US, and it is really, really difficult. And questionable value add, and exceptionally expensive as well. So, for me, I think there's these international standards that if we can prove that we comply with, we should be able to operate, because all of these regulators comply with the same standard. It's called FATF, that's the AML, CTF, KYC kind of thing. It's all the same thing. So we should be able to demonstrate that we meet the global standards, and we should be able to operate, I think, in accordance with local law, but globally without having to go through this rigmarole, which is just really painful, really slow, really expensive, and means we can't deliver value to the people that need it quickly. And Nigeria is probably a good example there, where there is no regulation and 49% adoption of crypto, and the people don't trust the government and they want a way to spend money, but we can't even serve them because of the lack of regulation. So yeah, that would be a little bit selfish, but that would be my point of friction.
Jay, you have a friction point?
So, I agree with both of you, but, I have a different opinion on everything. Being a crypto company or a blockchain company, everything is friction. Every single thing is a friction. It's a high hell battle on every step you take. But since we are powered by XRPL, I'm going to only pinpoint the friction in the XRPL itself, because I think there's a major elephant in the room that if we don't talk about it, it will never come out to the audience. So, we are being a XRP, company since day one. I think we launched our product in Canada, Bitcoin payment in 2020. The real friction that we see is the activation fee that we have to pledge for every single wallet that needs to be created. And these are very practical issues that we see every single day. Why? Because once SEC sue Ripple Labs for the XRP case, all of the major exchanges delisted XRP. Now we are live in Canada, and the people ask us, hey, I downloaded your app, how do I get onboarded with that? I said, okay, you need 10 XRP to activate the wallet. So okay, I'll do that. How do I get it? So it's okay to reply to 1 to 5 to 10 people, but it's not okay to reply to 1,000 people for the same question, because the problem remains persist. The barrier to entry. There are two type of barrier to entry. First is the language. Everywhere in the part of the world is a multi-language country. You can tackle it by incorporating IRL, real-time language conversion. That should that will at least get you going in your native language to how to sign up on the app. But how do you solve that 10 XRP problem? Because that's a protocol level requirement that you need to pledge. Not only that, we are a multi-currency app. So for XRP activation, wallet activation is 10 XRP, then you have Bitcoin 2 XRP, then you have USDC, you have 2 XRP, then you have to pledge for USDT. So the list goes on as the number of coins you want to in your wallet, the more XRP you need to pledge. So that is the main friction, in XRPL. That is why I think XRPL is lacking for developers. That is why XRPL is lacking for the user, because of the barrier of the entry. And if I have the magic band, I will disappear all of this magic, this fee, the XRP, because when you download a Bitcoin wallet, you don't need to pledge any Bitcoin to the Bitcoin ecosystem. It just works for free. That should be the barrier. That should be the entry to the crypto. You download Ethereum wallet, you download Solana wallet. There is no barrier to entry. But when you download we are a consumer-facing app, so that means we give you the secret keys. That means you need to either we activate your wallet or you itself activate your wallet. Either way, you gotta spend money, right? Why would you spend money on an app when you can download a traditional app free of cost? Right? And along with that, there is another cost that we don't talk about it, but it's required by the law, is KYC. That's just an addition to that barrier to entry. First, you need to have XRP. Then you say, oh, I have to now go through the KYC process with you guys. So that's becomes a problem for a mass adoption. I cannot ask So for example, we are live in Canada, and Canada population is not that much. It's only 40 million. But how the hell I'm going to get 400 million XRP to activate all of the Canadian? Because I want all Canadians on my platform. I want all Australian to my platform, because I didn't build the app for Canadian usage. I built the app for a global use. But how do you do that? If you go if you talk about a global level, it's 6 billion, right? If you multiply by 10, it's 600 billion. I don't think XRP has more than 100 billion, right? It's only 100 billion that was minted. So by itself is a barrier to entry, or a barrier to progress, barrier to mass adoption. That's it.
Wand. Thank you, everybody, very much. And I look forward to talking to all of you this evening.